Okay, support and resistance explanation. Now at a basic level, support and resistance are levels in price that create future strength in the opposing direction. Okay, so just keep that basic definition in mind. Okay, so we'll start off with this diagonal trend line, which is a type of support and resistance. Now, if price is coming from the top to bottom, this diagonal trend line will create future strength in the opposing direction, which will be up in this case. And the same goes for if price is coming up towards this diagonal trend line. This same diagonal trend line will create future strength down. Okay, now take this horizontal trend line, which is right here, right? Which is also a type of support and resistance. And if price was coming from the top to the bottom to this horizontal trend line, it will make future strength in the opposing direction. In this case, will be long. Okay, and it's the same if it's coming from the bottom to up. It creates future strength down. Okay, now let's go on to the next one. So round number is also a type of support and resistance. Now round numbers are areas of support and resistance that form at round number price levels. So for example, a round number will be 10, 5, or 1. And for example, 3 or say 8 are not round numbers. Now the theory behind why round numbers become support and resistance is based on the psychology of humans to tend to enter at round numbers or put stop loss and target levels at round numbers rather than non-round numbers such as 3 and 8. Okay, but it's the same again. This round number support and resistance creates future strength in the opposing direction. So if prices come from top to bottom, that creates future strength up. If it's coming from bottom to up, it creates future strength down. All right. And then we got this pivot point right here. Now pivot points are support and resistance levels created through calculating averages of the prior day's price action. Now that calculation of averages is done through the open, high, and close of the previous day. But there's many variations to how that calculation is formed. But the important point here is that this pivot point also is a support and resistance that creates future strength in the opposing direction. Okay, and then we have moving averages. Now a moving average is an indicator, right, that dynamically calculates the average of a predetermined amount of candles. So the moving average is a dynamic support and resistance in which it actually moves through price. That's right. But it's all the same. So if price is coming from top to bottom to this moving average creates future strength up. And if price is coming from the bottom up to this moving average, it will create future strength down. Okay, so there's many types of support and resistance that a price action trader can use. And more importantly, remember that to a price action trader, support and resistance are simply areas in price that create future strength in the opposing direction. All right, so now let's go on and define this term support and resistance a little further. All right, so support and resistance defined. Now, in terms of support and resistance lingo, when price is moving from the bottom to the top, and there's a price level that creates future strength in the opposing direction, we refer to that level as resistance. And opposingly, if price is coming from the top to the bottom, and whether it be a pivot point or a moving average or a trend line, that price level that creates future strength in the opposing direction is referred to as support. All right, so that's just universal lingo that all traders use, regardless if you're a price action trader or not. Okay, but furthermore, this resistance up here can also become support if price is coming from the top to the bottom, right? But moreover, this support can be resistance if price is coming from the bottom to the top, right? Okay, so let's go on to a little bit more of the basics of support and resistance. All right, so support becomes resistance and resistance becomes support. Okay, so let's say we had two horizontal trend lines providing as support and resistance. Now, if you go from the prior definition of support and resistance, if price is coming from the top to the bottom, this horizontal trend line is referred to as support because price is coming from the top to the bottom. But this same horizontal trend line, if price is coming from the bottom to the top, will be referred to as resistance, right? Okay, so you want to remember any given support can become resistance depending on which way price is coming toward that price level. And moreover, any resistance can become support, right? So if price is coming from the bottom to top to this horizontal trend line, we're going to call that resistance. But let's say if price gets through this resistance and then comes down, that same horizontal trend line will be referred to as support. Okay? And like I just showed you how price got through this resistance, or moreover, after price got through this resistance and came down, let's say this same support made price bounce off it. Okay, so there's basic lingo that traders use to define these events of price coming through a support and resistance or price bouncing off a support and resistance. Let's go ahead and look into those. Okay, so the meaning of breakouts, respects, and surpasses. Okay, so when it comes to when price comes in contact with support and resistance, there's basically three things that can happen. Okay, so right here we have three horizontal trend lines, all which act as support. Okay, so the first event that could happen is that if price comes from the top to the bottom to this horizontal trend line, price could break it out. Or in other words, it could close under that horizontal trend line. Or price can respect a horizontal trend line. So again, if price is coming from the top to the bottom to this trend line and can get deflected off that trend line. So in other words, there's no close under that trend line. Okay, and the third event that can happen is that price can surpass a trend line. So price could come from the top to the bottom. Let's say this is the previous candle. And on the current candle, price opens below this horizontal trend line. That would mean that price surpassed a trend line. Okay, and as a price action trader, let me explain to you how you want to interpret these three scenarios. Okay, so number one, a breakout means there was not enough opposing strength at that trend line to deflect the oncoming strength. So as a price action trader, if there's a breakout of this trend line right here, you want to interpret this event as there was not enough opposing strength at that trend line to deflect oncoming strength. Okay, because you want to remember, we're always thinking in terms of strength. Okay, so again, if there's a breakout of a trend line, you want to interpret that as there was not enough opposing strength at this trend line to deflect the oncoming strength. Okay? Number two, a respect means there was enough opposing strength at that trend line to deflect the oncoming strength. So you want to interpret a respect of a trend line that there was enough opposing strength on this trend line to deflect the oncoming strength. So in other words, there was enough long strength on this trend line to deflect the oncoming short strength. Okay? Number three, a surpass means price is not taking that trend line into account. So if price is coming down toward this trend line and surpasses it like so, the way you want to interpret this is that price is not taking this trend line into account, which means you as a price action trader do not have to take that trend line into account also. Okay, so now that we covered the basics of support and resistance, let's get into more detail of how a price action trader uses support and resistance in trading. All right, so ways that support and resistance are used in price action trading. Number one, they're used as walls that create future strength in the opposing direction. Okay, so that's basically what we explained up until now. But this is another way you can look at trend lines in terms of price action trading, is that they're walls that create future strength in the opposing direction. All right, so this horizontal trend line or support is acting as a wall that creates future strength in the opposing direction. Right? Every time it touches it, it's creating future strength in the opposing direction. Okay? And the second way that a price action trader uses support and resistance is as a method to understand the story of a currency pair. Now, support and resistance, especially used on the higher time frames, could give you a bird's eye view of the story of a currency pair, or in other words, what's been happening with a currency pair in the longer time spans. Okay, if you want to understand how that's done, please refer to the price action lesson in the intermediate course. All right, so that's the basics of support and resistance. Now, although there's many types of support and resistance that a price action trader can possibly use, honestly, the only type of support and resistance I use in my trading currently are trend lines. Okay, so in this beginner's course, I'm only going to explain how to use trend lines in price action trading and horizontal trend lines in particular, because in my opinion, trend lines are all you really need to efficiently trade price action. All right, so now let me explain to you what trend lines are all about. All right, so the problem with trend lines. Now, to begin with, let me explain that the single biggest problem with trend lines is that oftentimes traders do not have a basic set of rules that they follow when using trend lines. Now, let me explain why. So let's say there's 3 traders around the world, okay? And they all use trend lines in their strategy. Now, since there is no universal definition of what constitutes a legitimate trend line, each trader will likely have a different set of rules. So let's say this first trader right here attaches trend lines to the wicks of a candle. Okay, so let's say he would attach it to this wick right here, get a trend line. And the second trader right here, let's say he uses the bodies. So this trader right here would attach it, say, to this body right here, like so. Okay, but let's say this third trader right here does not have a specific set of rules when drawing trend lines. So in other words, she would randomly attach it to the wicks or the bodies, which is actually kind of common with most traders, right? So let me show you what is likely to happen in this trader's trading. So let's say she was looking for a short trade because her other strategies for trading are pointing her to sell. Okay? And she wants to confirm this short sell through trend lines also. Now, because she does not have a specific set of rules that define a legitimate trend line, then she wants to take a short entry. She's going to arbitrarily draw trend lines to suit her specific situation, which is to sell in this case. So she's likely to attach a trend line to the wicks of a candle, right? Because when she attaches it to the wick of a candle, you can see right here how price respected that trend line, which means, like I mentioned earlier, there's enough opposing strength down to deflect the oncoming strength long, right? And thus even trend lines are supporting her view. But on the other hand, let's say she was actually looking to buy. Well, in that case, what she's likely to do is attach the trend line to the bodies, right here. Because this breakout right here shows that even through trend lines, this breakout right here is supporting her view of buying. Okay, so the single biggest problem with trend lines is that a trader does not have a specific set of rules that define a legitimate trend line. Okay? But also keep in mind, it's okay if there's no universal definition of trend line, as long as a trader has their own set of rules that define a legitimate trend line. Now, let me explain to you why. All right, trend line rules and efficiency. Now, like I explained in lesson 1 of this course, the main goal of trading is to make consistent profits over the long term, right? So that'll be this graph right here. And I also explained that a strategy's efficiency should mimic this total profit curve, right? You can see that the total profit curve and the strategy efficient curve are both generally mimicking each other. Now, if you're going to use trend lines in your strategy, the trend line efficiency curve should also mimic the strategy efficiency curve and the total profit curve. Or in other words, your trend line efficiency should consistently become more efficient over the long term. Okay, and if you don't have a basic set of rules that define a legitimate trend line, there's no way that you're going to reach efficiency with your trend line strategy. You want to begin with this basic set of rules. Okay, and that's very important to remember. You want to take one set of rules and develop and hone that over the long term. Okay, so now let's go over the basic process of how a trend line becomes more efficient. All right, so legitimate trend line rules evolution. Okay, so if you're going to use a trend line in your strategy, it's going to go through the same process as your strategy evolution as a whole, because the trend lines will be part of your strategy, right? So let's just go over this once more. So in the very beginning, there's the creation of the basic rules, and there must be 0 unknown variables. So like I explained in lesson 1, an unknown variable is an aspect of your rules that you personally do not have full knowledge of. So if you're using a sophisticated formula or a technical indicator, that you didn't make those, right? And if you didn't make them, that means you do not have a full understanding of it. Or in other words, there are unknown variables, okay? And this is very important to make sure there's no unknown variables, because as you go through the evolution process of your trend line strategy, if you have unknown variables in it, you're going to hit a wall. And most likely, you're going to either have to take that entire aspect out, or you're going to have to start all over. Okay, so it's very important that in the beginning, you have 0 unknown variables to the basic rules of your trend line strategy. Again, because the only way to make your strategy more efficient is if you completely understand the ingredients in that strategy to begin with. Okay. So first you go through the creation of basic rules, and then we go on to the backtesting phase. Now in this backtesting phase, that's when we use historical data and apply the basic rules that we just created in order to see if the basic rules is even worth refining or not. Okay. Now in the creation of basic rules and backtesting phase, we want to use a demo account, because there's no merit to actually putting real money into these phases. Okay. Then we go on to the refinement phase. Now this is the phase in which we start using our trendline strategy on real-time price data. Okay, so we want to start seeing whether our trendline strategy can accurately gauge the future long and short strengths. Okay. And at this phase still, you could use a demo account, or you can use a real account, but you want to use a micro account, because again, this is a negative profits phase and you will lose money. All right. Now this initial refinement phase will likely take the longest in terms of time. Now how long is up to the trader, and I cannot say, but just remember, in terms of all the phases of evolution, this negative profits phase will likely take the longest. Okay? And then we reach the refinement phase of break even, in which your trendline strategy, which is a part of your overall strategy begins to make a break-even profits. Okay, and at this point, you do want to use a real account because again, there's some things that you can only learn with real-time trading and moreover, with real money. All right. And then we finally reach the efficiency phase where we start to have consistent profits over the long term. Okay, so now let me explain to you the rules that I use to draw legitimate trend lines, specifically horizontal trend lines. Now you could use my rules directly into the creation phase of your basic rules because there are 0 unknown variables to it. Okay, but of course, you could use my rules as a bedrock and then tweak it to your liking. Okay, so that's up to you guys. All right, so let's look into that. All right, so horizontal trend line rules. Number 1, attach a horizontal line to a wick of a candle. Do not attach it to the body of a candle. All right. We want to attach horizontal trend lines to the wicks of a candle, like so. We do not want to attach it to the bodies. Okay. And number 2, the horizontal trend line cannot be broken out or surpassed at any point to the right of the attachment point. Okay, so let's say you attach a horizontal trend line to this wick right here, and it cannot be broken out. As you can see right here, price closed under this horizontal trend line, which means it broke it out, which immediately makes that horizontal trend line to not be legitimate. Moreover, it cannot be surpassed also. So you can see this candle right here opened under this horizontal trend line, which means it surpassed it. Moreover, right here, you can see that price opened under this horizontal trend line. And so if this happens, a trend line is no longer legitimate. Keep in mind, this rule only applies to any point to the right of the attachment point. And that attachment point was right here. So whatever happens to the left of this candle right here has no consequence to the legitimacy of a trend line. Okay, let's go number 3. Or 3, a horizontal trend line only becomes legitimate if it has at least one test on it. So a legitimate horizontal trend line must have 3 contact points for it to become legitimate. So let's say we attach the trend line to this pivot right here. You can see it has 1, 2, 3 contact points. Now at this point, after the 3rd contact point is made, if price comes down from top to bottom to this horizontal trend line, it's going to act as support and produce opposing strength, which will be up in this case. Okay, so these are the 3 rules that I use that constitute a legitimate trend line. Again, you could use these rules as a bedrock and then tweak it to your liking, or you could use it on its own because there are 0 unknown variables to it. All right, so let's just look at this on a real chart also. All right, so this is a dollar Swift monthly chart. Now let's look on this upper side first. So if we attach the horizontal trend line to this pivot right here, it has 1, 2, and 3 contact points. And so if price reaches this horizontal trend line will create opposing strength, which is down in this case. Now, however, if price breaks this trend line out, this trend line is no longer legitimate. So the next time it comes up to that trend line, it does not create opposing strength down. Right? And even more, if price surpasses it, no longer does this horizontal trend line create opposing strength down. Okay, and moreover, the breakout and surpass rule only applies to the right of where the trend line is attached. So that's this point right here. So if there was a breakout, surpass, to the left of this attachment point well, this horizontal trend line is still legitimate. Okay, and we have the same thing here. So we attach a horizontal trend line to this pivot. It has 1, 2, 3, 4, 5, 6 attachment points. So if price comes down to this trend line, it will create opposing strength, which is up in this case, right? Okay, so let's go back to the slides. All right, and if you want to know how to draw diagonal trend lines, the rules are basically the same as horizontal trend lines. And I explained that in the intermediate course, so please check that out. Okay, and now you want to recall that the goal of price action trading is to figure out how much future long and short strength there is on a currency pair. And there's a couple more rules that I use with trend lines that can more accurately figure out how much future long and short strength there is. Let me go ahead and explain those to you. All right, so measuring future strength with trend lines. The more tests, the stronger. Okay, so let's say there's two horizontal trend lines. One is resistance, the other one's support. Let's say price is coming around, came up to this resistance, bounced off, down to the support, bounced, support, bounce, 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 and price is right here, right now. Now, how many contact points or tests were there on this resistance? 1, 2, 3, 4, and 5. And this support has 4, 3, and 4 contact points. Now, if we were measuring future strength simply with these two trend lines, this resistance creates more future short strength than this support creates future long strength. So in other words, if price came down to this support after being rejected at this resistance point right here, price should break this support out and get through it, because there's not enough opposing long strength from this support to reject the future short strength coming from this resistance. Okay, so a basic rule of trend lines that the more tests there are on a given trend line, the stronger it is. Okay, so let's go ahead and look at this on a real chart also. Okay, so back on that same chart, we have two trend lines. One up here, here. Top one is attached to this pivot. The bottom one is attached to this pivot. This top one has 3 tests on it. 1, 2, and 3. This one has 1, 2, 3, 4, 5, 6. Okay, 6 contact points. All this resistance only has 3. Now, if we were only using trend lines to measure the future long and short strength, price should get through this trend line and break it out, because this support has 6 touches on it, while this resistance only has 3 touches on it, which makes this support have more future long strength than this resistance has in future short strength. All right, let's go back to the slide. All right, and there's a couple more detailed rules. Let's go and look at that. All right, measuring future strength with trend lines. Each trend line used to measure future strength must be from relatively different pivots. All right, so you want to remember, each trend line creates future strength. So if there were 2 horizontal trend lines right here, acting as resistance, and each has a strength of plus 5, future short strength, and this horizontal trend line down here is acting as support with an equal plus 5 future long strength. If price reached both of these horizontal trend lines, there will be a future short strength of plus 10 future short strength, because there's 2 horizontal trend lines, right? And since there's only 1 horizontal trend line as support, creating only plus 5 future long strength, when price reaches this horizontal trend line, it should be broken out, because there's more future short strength than future long strength. in this currency pair. Okay. However, that said, each trend line you use to measure future strength must be from relatively different pivots. Let me go ahead and explain this to you. Okay, so take this trend line down here, which was attached to this pivot right here. Each trend line must be from relatively different pivots. Now, pivot are turning points in price. So you see at this point, these are all turning points in price where price went down, right? Here, at this point, price went up, price went up, price went up, right? So a turning point of price is what's referred to as a pivot. And these areas right here are not pivots, right? Because they're not turning points in price. Okay, let me get rid of these. So again, if we attach the trend line to this pivot right here, you cannot attach a trend line to the same pivot but a different candle. So for example, you cannot take another trend line and attach it to this candle right here because it's from the same pivot. And you don't want to have each of these trend lines creating future long strength. In this case, since both of these trend lines are from the relatively same pivot, only one of those will become a trend line that creates future long strength. Okay? However, if you were to attach this trend line to this pivot right here, well, that's a relatively different pivot, right? When compared to this pivot right here. Well, in this case, both trend lines will act as support that create future long strength. Okay. Now, if you're confused to what constitutes a relatively different pivot, ask me questions in the comments section or join me on Discord and we could talk one-on-one. Okay, so let's go back to the slides. Okay, so there's one last detailed rule. Let's go on to that. All right, so the higher the time frame equals stronger the trend line. Okay, so let's say each of these trend lines have the same amount of contact points. So this weekly trend line, 4 contacts, monthly had 4 contacts, daily had 4 contacts, so on. However, if the time frames are different, so this one was a weekly one, monthly, and a daily. As a basic rule, the higher the time frame equals stronger the trend line. So if price was hovering around here, came up to this weekly trend line, which created future short strength, price came down to this monthly trend line, which also had 4 touches. Same as the weekly, right? This monthly trend line will create more future long strength, and thus price should go up and get through and break out this weekly trend line. Simply because the higher the time frame, the stronger the trend line. Right? And the same is true for a daily and a weekly with equal contact points. If price bounced off this weekly trend line, creating future long strength, price should get through this daily trend line, or in other words, break it out. However, if it gets to a monthly trend line, because it's a higher time frame, price should respect this monthly trend line and go down. Okay, so those are the basic rules for horizontal trend lines. Now let me briefly just go over how you want to use this information in your trading. Okay, begin the evolution of your trend line strategy. Okay, so this is an overview of how you want to go about developing your trend line strategy. First of all, you could use my trend line rules that I just explained to you as is or adjust it. So you could tweak it if you want to, using my rules as a bedrock. Or you could create your own basic rules. That's completely up to you. But either way, you're going to have to go through the evolution process of the trendline strategy. But just remember to make sure that your basic rules have 0 unknown variables to it. Okay? Or else halfway down the line, it's going to begin to be very difficult to further make your strategy efficient. then most likely you're going to have to start all over. Okay? And the most important thing is, as you go through the evolutionary process of your trendline strategy, if you ever have questions about price action trading or the evolutionary process, leave a question in the comments section or join me on Discord, guys. And I'll be happy to give you advice or share my experiences through the evolutionary process of a strategy. Okay, number one, in price action trading, you want to view support and resistance as levels in price that create future strength in the opposing direction. Okay, so you want to remember, price action trading is simply about figuring out how much future long and short strength there is on a currency pair. And support and resistance is simply another tool that allows us to figure that out. Okay, number two, there's no need to use every support and resistance tool in existence. Now, when it comes to which tools you use to measure strength, the mentality you want is to be an expert at one tool rather than mediocre at many. Okay, number three, the basic rules of your trendline strategy must have 0 unknown variables to it. Now, having complete knowledge of the basic rules of your strategy is what allows you to enhance your strategy to efficiency. And ignoring the 0 unknown variable rules will eventually cause the evolution of your strategy to stop and force you to start all over from square one. Okay, number four, you can use my trendline strategy as is, or you can adjust the strategy to your liking. Okay, but if you're going to adjust my strategy, just make sure there's 0 unknown variables to the basic rules. Alright, so if you have any questions, please leave it in the comments section, or you could join me on Discord and we could discuss it one-on-one. Okay, and I hope you guys have a great day, guys. Thanks for watching. Okay, bye.